Hello everyone, this is Carl from ForesideFX.com, and today is October 20th, 2009, and I'm going to continuing into this week trade situation, and I'm going to give you some insight of what is going on so far and what could I expect from the market. So let's get right into it. This is a daily chart. If you notice, the market has been going into a pattern of wave downs. This is a 1, 2, 3. This is like the fourth wave. So if we follow through the typical wave patterns, you know that the basics are 1, 2, 3, 4, 5, and they usually go on ABC corrections to the upside. I'm not too much of a fan of Elliott wave pattern, but that is the basic, and the way that I use it is just a basic simple 1, 2, 3, 4, 5, meaning that the market came from 1, 2, 3, 4, so the expectancy is a fifth wave down. Will it move all the way down? Of course not. I'm just assuming that I could expect a market resistance and start seeing some retracement at this level. That's the only way that I use it. So that's one point. Second point, I reach most of my target price to the whole move to the upside, and the market just stalled right there and is holding right there. As you see in past history, we see a lot of resistance in that level. So what I can expect for the market to do so far right now is a possibility of start going drifting downwards. So this is the synergy zone target to the downside, and up to this point I'm still bullish at this market based on the weekly charts, and I'm expecting the market recover. Obviously, for those major banks and those major players that went long the market, they're probably covering their positions up to this point, and we can have a possible 130 175 pips to the downside on the recovery. Will it happen? I'm not quite sure up to this point. I will wait for the market to be close to the European session opens. I'll wait to see some activity for the market this time, and I will probably jump in if I see some conviction into it. So far, my expectancy in the long term is still bullish, but in the short term, I'm looking for some corrections to be made back to the synergy zone or the moving averages in this case. So the targets would be 64.45, 62.45, 6232, 6211. Once again, I'm not quite sure if they're going to reach it fast, but the most probable scenario is that they should retrace up to that area, consolidate, and keep going back up. Now, narrowing down in the 1 hour chart, we see the market just hit the retracement, the moving averages. If you notice, they move with conviction into it, and he has taken 6 or 7, 1, 2, 3, 4, 5, 6 hours to recover what they did in one. Meaning that they're having a lot of trouble going back up, meaning another possible reversal point up to the 62.45. So in my case, I'll wait for the market open on the UK session. I'm going to probably see my indicators to tell me if I should take this short sell, and I'm going to be very cautious. And number two, I'm probably going to lower down my contract size to this matter. The reason being because I'm still overall bullish. I don't want to risk much of my profits that I made, since there's always risk of losing a couple of pips here and there. I don't want to give back what I already made, so I'm going to go half of the usual lot and very tight stop in this scenario. Going a little one step lower, we've seen that the market completely came into the synergy zone buy area for this today. That was a great buy. The market pierced it, so meaning that they went with conviction, meaning that they want to go lower than that, and now they're hovering back, consolidating a little bit, giving a potential sell side, and the major target would be 62.45. That's so far what I got for you guys, and hope you've seen this opportunity. So far, I'm standing aside. I got no trades whatsoever. Slightly bearish for the short term. Still bullish on the long term. God bless. Happy pip hunting. This is Carlos Diaz from ForesideFX.com. I'll see you later.